Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Welcome back to Part 2. In the previous video, we talked about the hidden costs and cash flow risks caused by manual bookkeeping. Now, we'll look at the security dangers, audit challenges, and why outdated bookkeeping methods can limit your business growth. Without instant updates, you might accidentally spend money that's already spoken for. This leads to issues like bounced checks, overdraft fees, or even the nightmare of missing payroll because you thought you had a cushion that didn't exist. Real-time cash flow is the heartbeat of a company. Manual systems let that heart skip far too many beats. The high price of fixing manual errors during tax season. One of the most frustrating parts of manual bookkeeping is the cleanup fee. Many business owners try to save money by using a cheap manual service all year, only to hand a mess over to a CPA in April. When your CPA sees a year's worth of handwritten notes or messy spreadsheets, they have to spend hours finding and fixing errors. You end up paying twice for the same work. First, you pay the manual bookkeeper to enter the data, and then you pay a high-priced tax professional to fix it. This is a terrible return on investment. Automated systems catch these errors as they happen, which means your tax professional can spend their time on strategy instead of hunting down a missing $5 receipt. Security and scalability hurdles that manual systems can't clear. Security is a major concern when you rely on physical books or unencrypted spreadsheets. If your financial records are sitting in a file cabinet or on a single laptop, they're vulnerable. Fire, theft, or even a spilled cup of coffee can destroy years of financial history in an instant. Furthermore, spreadsheets sent back and forth via email are easy targets for hackers who want to steal your company's sensitive bank info. Scalability is another mountain that manual systems simply can't climb. Think of your business like a bucket used to carry water. A manual system is like a bucket with small holes. It works okay when you only have a little water, but as you pour more in, the leaks become a crisis. If your sales double next month, a manual bookkeeper has to work twice as many hours to keep up. This means your costs for bookkeeping will grow at the exact same rate as your business. A good investment should become more efficient as you grow, not more expensive. Manual services force you to add more staff or more hours for every new customer you gain, which eats into your profit margins and makes it harder to stay competitive. Why manual records are a nightmare during a financial audit. If the IRS or an investor decides to audit your business, manual records become a source of extreme stress. Audits require you to prove exactly where every penny went. In a digital system, you can search for a transaction in seconds. In a manual system, you might have to spend days digging through boxes of paper or scrolling through endless spreadsheet tabs. If you can't provide quick, clear answers during an audit, it raises red flags. This can lead to heavy fines, or worse, it can cost you the trust of potential investors or lenders. They want to see clean, professional, and easily searchable data. If your books look like a high school diary, people will hesitate to put money into your company. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.